Welcome to episode 2 of the Property Perspective podcast with me, Jordan.
And I'm Alex.
In the first episode, we spoke quite a lot about our previous experiences from a personal perspective in our careers and how that relates to property. This episode, we wanted to talk a bit more about the company, the services we offer, kind of recent deals we've done over the last couple of years, and then the sort of deals that we're looking at doing over the next few years. And then we want to talk a bit about the services we offer to investors and whatnot as well. So in terms of how we started as a company, it all stemmed from that first buy-to-let deal in Devon.
Which you dragged me to Devon to do a rewire on an old tired 2-bed terrace house.
On a shoestring budget sort of thing.
Not the sort of budget that I'm used to working on.
But
not the sort of commute I'm used to working on either.
But you were creative, which is
always
what we need.
Helping a good mate anyway, so it was all fun.
Yeah, so... that was a 2-bed terraced house, which was tired. It wasn't terrible. It was tired. It hadn't been worked on for 20 years.
I think it was a bit more than tired. It was pretty tired. I mean, it was knackered. No, it had mold everywhere, damp everywhere.
The reason I say it's tired,
new services throughout.
I'm just thinking of like Buccleuch kind of tired.
Yeah.
When you compare them.
Yeah, I think it still wasn't really livable, was it?
Nah, you wouldn't move in there. No, definitely.
No.
But yeah, we were. I was doing the deal by myself originally, and then, as I say, needed someone to do the electrics, and thought no one better to do it than you. And then we were driving down the road. Well, should we talk about the deal first, and then talk about how
because that was a good little project. And I think I enjoyed it as well, because at that time I was already hoping to start my investment journey. So when you shouted me and was like, do you mind helping me on my investment, straight away I didn't really even care about my side of the work. I was like, this is great that I can actually see what you're doing, because this is something that I've wanted to do in a while, but I just didn't really have the means to do it by myself at the time. So I was all for it. I was like, yeah, of course I'll come down and give you a hand.
So it was a 2-bed terraced, very tired, aka run down. Needed damp work doing to it, needed new kitchen, new bathroom, new flooring, paint and decorating throughout. And my original plan for it was just to do that, just to kind of uplift it from
to flip it, or were you always planning to rent it out?
Always planning to rent it out, but it was just going to be to kind of uplift it. So there was a small kitchen there was a dining room, there was a lounge, 2 bedrooms, and then a bathroom.
Traditional 2 up, 2 down, really, wasn't it? With a little sort of extension at the back.
But the bathroom at the top it is still a small bathroom, and it only had a shower kind of cubicle in there, had no bath. And then, as I say, the downstairs kitchen was like a tiny little galley kitchen right at the back. And I think I was watching Homes Under the Hammer, and classic. Someone on there reconfigured the dining room to a kitchen diner, and it kind of just opened my eyes, and I was like, I could do that with Millbrook, because it's got a tiny pokey little kitchen, and then it's got the kitchen diner.
2 sort of big rooms, really.
Yeah, it was like nowadays with the way everyone lives now, it's more
all about open plan. I mean, everyone's knocking everything down now.
Well, yeah, walls are going, and the kitchen is the hub of a home. I know, obviously, traditionally that was the case, but people went to eat in the dining room, whereas now it's like you eat in the kitchen, or it's just
it's changed.
It's just how it works. So I converted the dining room into a kitchen diner, nice open plan, like L shape, quite a big kitchen now in comparison, and then made the what was the kitchen a utility room, which we'll talk about a bit more what I should have done there, which is what we did in Orchard, was then make that utility room a utility and downstairs toilet, because that actually adds value, which I didn't do, but
it's
my
all
first
lessons learned.
Exactly.
I mean, you already added value, and I think later down the line, when we found or we invested in a property that was pretty similar blueprint to that deal, we thought, were like, well, how can we improve it, and
how can we add more value to it?
One of the reasons.
Converted that to kitchen diner, kept the lounge as the lounge, put all of the service, like the boiler and all those kind of bits, out in the utility room, so it just allowed the kitchen to be just literally that kitchen diner, nice space, big kitchen. And then in the bathroom, where it had just a small like shower cubicle, I wanted to, because I've got kids, I've always, like, bath time's an important thing, and I thought if I'm going to rent this to a family, it needs to have a bath in there somehow. So I think a standard bath, I'm going to show my lack of bath knowledge now, but I think a standard bath is like 1.2 meters length or 1.4 meters length or
Yeah.
something like that. But there was like slim fit or small baths that you could fit in. So I managed to cram a smaller bath in there, and then a sink. And like when you see the bath, it doesn't look like a small bath. It's just a bit smaller than standard. And got
Perfect
that in there
for a kid, really, though.
Yes, exactly. And then nice shower suite and all that kind of stuff in there. So then it's got bath, shower, and then just did the bedrooms. That was then rented out for a year to one tenant, then rented out to someone else for another few years. And then interestingly, we've been speaking about it, and we've now converted that over the last week or so. Tenants served their notice last month to move out last week, and we've now converted that into a service accommodation kind of plot, and which has been hard work because there's been lots of like furnishing orders, flat pack furniture, IKEA, all of it, Dunelm. But it looks really good now.
Yeah, it looks lovely. It's come out really nice.
Yeah.
I think when you always, it's a different sort of feel when you leave a place like as a blank canvas, or when you actually fill it up with furniture and all the sort of pictures and stuff like that. You really set it, don't you?
Exactly.
And you get a different...
Once you've got the art up there, you've got the plants in there, and just like different, like the dining. It's an interesting one because I actually spoke to the tenant when they left, because when they were in there, I'd seen pictures of how they'd done it, and I visited them and stuff. And I said to them, like, can you send me pictures of each room and how you live in it now, so then I can kind of not copy it exactly, but like just get a feel for how it's been lived in,
because sort of home. Well, what they done to the place was actually lovely, and it's sort of, they were the ideal tenant, really. They came in, they painted a couple of rooms, they
gave it some character,
done a little bit of decking out the back, and you know, I mean, they spent a bit of money, and it was nice because they made it sort of personable, and
Exactly.
It was a proper home.
Yeah, and that's exactly what I wanted it to feel like now. So then when people do rent it on Airbnb, they feel like they're staying in a home. To your point, like when we do these refurbs and you make them a blank canvas, so it's literally like nothing in there, it's just like another kind of kettle of fish and a whole different like ball game of like, once you then have to furnish it, and like, oh, does the bed fit there? Does the bed fit there? It's like a completely different ball game.
But for serviced accommodation, that's what it is all about, especially when you're marketing your place. You want it to stand out.
Yeah.
When you're scrolling and there's maybe 10 properties in the same area, you want yours to stand out.
Exactly.
And I think having that sort of decor and
nice
paint and stuff like that, it makes it stand out.
Fortunately for me as well, the tenants, as you said, they painted 2 of the rooms in a nice colour. So I've kind of kept those colours and then base some of the furniture off those colours, so it's kind of actually helped me a bit. The way
gave you a little start up, really.
Exactly. Rather than it all being white, which is when I first rented it out, it was all just white. So that was kind of the Millbrook deal. I've gone into a bit of a tangent about what's happened with it now, but it was there where it was the way home, because for context, we live in the greater sort of London area, just on the outskirts of London, and Millbrook's in Devon, and it was those 4-hour journeys there and back that we were doing, and it was on the way home where I think I said to you, I'm going to go again after this.
I think, we were talking about, I asked you, what's the sort of exit plan? And you said, well, once this is done, I'm looking to remortgage and pull out as much money as I can and go again. And I can't remember if you asked me what's your position, because I know you wanted to invest, or
because we've always spoken about,
we always knew investing, what pages we were on. It was not a hidden fact. Like, we went to property things together and stuff like that, so we knew that's what we're both interested in. And I think the conversation just opened with, are you ready to do something on the next deal? And it was 100%. Let's get stuck in.
So then I think I managed to pull out 40k from the deal, which was I think.
And how much did you put in?
I think
with purchase and
I think all in was like 60k in. Managed to pull 45 out, so left 15k in, which
really is 80% of your money or something like that.
And with the profits from the last 3 years of rental, that's all money out now, because the profit from the rent is paid off that 15k that's in. So,
and that's a good thing to look at, because you always look at sort of return on investment yearly or day one return.
You always try and get that unicorn deal, don't you, where it's like all of the money's back out straight away.
But I think doing that calculation of knowing when you're actually all money out, and now the equity in this property is profit, and my cashly returns is profit.
Exactly. So
and that's something we do on every deal now, that we forecast in all our spreadsheets, is how long is it going to take us to
get all money out.
Exactly. Especially if we're working with clients, they want to know that as well. So it's a good
exactly
good figure to have.
It's a good point, because when you're packaging a deal up to an investor, there's 2 numbers, right? There's day one money out, in terms of when we do the remortgage, how much money is the investor going to get back on day one, and then it's the the monthly returns that you're getting to be able to get all of their money out, and how long is it going to take to do that. And as you say, that's part of our spreadsheet now, which is a key number really, isn't it? Because
100%,
without that, it's kind of hitting and hoping almost, isn't it?
You want to know that, otherwise you're just putting money into deals and you don't know when that money's coming back to you. Really, you're only in plus once that all comes back to you, and you start making some on top of it.
One thing I obviously we consider, and it's all part of our calculations, but one thing I always underestimate is the power of the capital appreciation. Obviously, when we're buying deals, we're looking at buying it as cheap as possible, spending money on it to bring it up to a high standard, getting as high GDV as we can, and then how much money we're going to get out on day one. That's kind of they're the key numbers. And then it's the monthly cash flow to pay the investor back all of their money plus interest. But then it's zoom out 5 years, zoom out 10 years. You've then got like another chunk of
hidden
part of it, which obviously you factor in, but it's like you when deals that are in our portfolio, when they coming into remortgage times now, so like Millbrook's going to be up for remortgage next year, and then Orchard's the year after for us. It's like it's a great bonus as part of property,
because you almost forget about it.
And which is a good thing to forget about. But and then
it's a hard one to factor in as well, because you don't actually have,
and you can't guarantee it. You
don't
can't
know
say,
what
in 5 years
market,
it's guaranteed going to be worth X amount. You obviously have rough averages of over 10 years capital appreciation of properties is like 10% or whatever it is.
I think that's where just doing your homework and picking, areas which do well. People want to live there for whatever reason, whether it's because of the scenery, or because of the commute to work, or because of the universities. That's all those factors, isn't it? And over time, that place is not going to go out of fashion.
Exactly.
People want to live
there
for
for whatever reason. It's got the core
reason.
strengths or the core requirements of an area, then you're good, really. So that was Millbrook. That's how we started speaking about kind of getting involved together as a company. And then we went to lots of different viewing areas.
Didn't really take long from there, from that conversation in the car to opening a limited company and saying, right,
because first we were speaking about it, and it was like, right, let's do a JV first. And then it was, the more we spoke about it, the more we realized it was long term that we're doing this for. And we're like, let's just set this up as a company and create a vehicle properly, a proper property investment and development company that's going to invest in properties, as we said, bring them up to a higher spec, recycle as much money as we can to go again, building portfolios. And then we set it all up properly and officially limited company, got all of the accountants on board, branding, website. A couple of months probably after we did a few viewings days, didn't we? And we thought, let's go back to Devon because we'd done it. We got the trades there. We had plumbers there, decorators there, chippies there. And then there was a viewing day. I vividly remember the agent we had, because she took us around to a few different ones. But then Orchard was, there was one flat we looked at, and I never forget the response she gave us when we were like, oh, how long's the how long's the lease? And she was like, oh, let me think about that. Very long.
Yeah. How long?
Very long.
Long. Okay.
We're like, oh yeah, thanks for that. And then there was something else she said, which was, we said something like, oh, what's the rental demand like around here? Oh yeah, high, strong, or something.
Very good.
Yeah, very good. But she took us through to a few different properties.
We joke, but we actually bought a property.
Well, that's what I was going to. Yeah, literally. So it shows.
I don't know what that shows about us, but
it shows that. Yeah, I don't know what it shows us.
No. But we knew what we were looking for.
Yeah,
because
and that's the thing about agents. Sometimes it's like, obviously, I rate what agents do. Yeah. Good agents, anyway. You get some good ones, you get some bad ones. But if you know what you're looking for, the property sells itself sometimes, isn't it? Like,
well, we've got.
She definitely.
I think over time we've filtered out how we do our viewings. There's a lot of properties now that we don't even bother going to see anymore because they just don't meet the character before we were viewing everything.
20 property day where we book from 9 a.m. till 5 p.m.
It looks great. You think, oh yeah, it's run down. But it's like you haven't really done your homework. You don't know. It is run down, but does the price reflect it?
Yeah.
Or,
that was like the other day. So compare like a 20 property viewing day that we used to do. We went for a viewing day the other day, didn't we? And then it was about, we looked at like 6, didn't we? 6 or 7. Yeah. But all 6 or 7 of those were like,
quality.
That could work. Like all of them could work. And that's kind of what you want, really, isn't it? Because then
It is hard because I think it is a numbers game as well. I think there are a lot of properties that sort of have surprised us. You don't think they're much on the advert, and then you go and see them and you think, oh my God, that was actually
a lot better.
The space is completely different. The area is a different feel. So you do have to do the viewings as well.
100%.
But I think there is within reason of limiting, wasting your time. I think one thing that we done that was really helpful was when I can't remember which, it was when we were investing in Northamptonshire and we were struggling to match our days and well, no, it wasn't match our days. We were struggling to get the volume of viewings that we needed to find a deal.
We set a target, didn't we? We were like 100 a month.
We need
or something
to do
like
this, and then we split the viewings days, didn't we? So you done one and I done one, and I think that was one of the best things we done at that time because we now just doubled the volume of places that we could see.
Which is the benefit of a
partnership. We both knew what we were looking for.
Yeah.
We had
the blueprint.
We had the itinerary, so it was just like, right, there's your 10 properties, there's my 10 properties. Let's go through it because on that deal, I didn't actually view
on the clue
that property. You viewed it. You obviously got a video from it because you thought this is a potential one, and that was the first property I bought without actually
looking at
seeing it.
So you've got that accolade. I haven't got that one yet. I've actually seen every single one I've bought so far, but things can change.
That's it.
But back on Orchard. So that was the first property we bought through modern method of auction as well, wasn't it? So we viewed that. The auction was, I think, like a week later or something like that. So then we both logged in from both respective houses. You were at your house, I was at my house. We set our budget in terms of what we want to, the max we want to spend, and I think it was the max. I think we ended up paying, didn't we?
I think we set an auto bid. I can't remember if it was 102.5 or something like that. And I think someone's auto bid was outbidding us.
Yeah.
And then it got to, I think, 103, and then we went 104.5, and then the offer held. And then I think there was a couple minutes on the clock, and we were just like, sort of there biting your nails, and then the hammer came down, and it was like,
I was expecting like fireworks and things like that, but it wasn't. It was just well done. For context, for people that have never done a modern method of auction, it's basically like eBay when you're doing an auction on eBay. And when you set your like reserve price when you're bidding on something, it will automatically kind of get outbidded like every time someone outbids you. And then it's literally, it ended a bit like an eBay auction, didn't it? Where he was like, well done. And
you're the winner, you won. Yeah. Paid a reservation fee. Yeah, and then the rest is history.
The reservation fee on that, and I think on most of them through that I Am Sold, which is the auction house that we bought it from, $6,000, isn't it, for the reservation fee? And then there's like an admin fee of the reservation fee.
6,300 it was.
Yeah.
Which we at the time, because this was a big learning curve, wasn't it? We were under the impression that 6,000 was to reserve the property, but would also go
against
towards
the deposit.
Property. But we later found out that $6,000 was just the auction fee, basically. Yeah. So that's something to factor in, because
when you're doing modern method of auction, for sure,
$6,000 really buying power. If you're putting down 25%,
times it by 4,
it's $24,000. Yeah. So it's a lot of buying power, and I think we were a little bit lucky in a way that we actually got a good deal and that didn't shoot us in the foot. Yeah, but it was something definitely we noted for the next time we bought an auction, was like, right, we actually factored this reservation.
And it actually, sometimes that $6,000
doesn't make worthwhile.
Some deals, when you whack that in the spreadsheet or your calculator, it makes some deals not worth it. When you're at that sort of scale of project, at those kind of small buy-to-let sort of deals, it can really make an impact into your
100%.
Figures. So yeah, that was a good experience doing the modern method of auction.
I was buzzing, man.
Yeah, we were both like,
yeah.
And then
I was
we're
in
like,
my kitchen just going mental. I was
in my little garden office. Yeah, it was
just won a house on auction.
Yeah,
I want to get in there now.
And then
give me the keys.
Like we were just ready for stripping out straight away, weren't we?
Yeah.
But with modern method of auction, you've got I think it's 40 days to complete, whereas with a normal auction, it's 14 days. The good thing about modern method of auction is you can get a mortgage on it rather than like a bridging loan with the standard auction. It gives you a bit more time.
If you've got a good team,
and you've got a good
team, which we were lucky we had someone that could pull it out of the bag.
Yeah, that was all good, wasn't it? And then it was renovation. So similarly, to Millbrook, it was 2 bedrooms upstairs, 2 downstairs. Bathroom was much bigger in this one, wasn't it?
Yep.
It had like a chair lift, which didn't we sell the chair lift for like 300 quid?
Yeah, was
WeBuyAnyChairlift.com.
We Buy Any Chair, yeah, which was an absolute touch.
Yeah.
They came, unbolted it, took it away, and paid us a little fee.
Got reduced our auction fee a little bit.
Project-wise, one of the things we loved about this was it was almost identical to the one
blueprint
that you invested in, and I gave you a hand in. So it was like, we know the figures for this. You already had a spreadsheet down to the last penny and of what you spent on a toilet roll holder. No joke.
Quite literally, yeah.
So we knew how much something like that was going to cost.
Yeah.
We already had an idea of creating that big open kitchen diner, and then we added into the mix, adding another toilet downstairs. And I think that really done well for the value, didn't it? And I think for a family, things have changed now. I mean,
it's weird,
when we grow up, it was one toilet in the house. It was not like, if you had a second one, it was like,
you're posh.
You got two toilets. Now people have got three toilets. It's like you've got en suites, you've got the main one, and then you've got a little one downstairs. It's like
literally.
Don't know what that says about everyone's stomachs if we
all this processed food that everyone eats.
I think having another little toilet downstairs is a bonus.
And they say it's like adds like 5%. Yeah, I think the quote is.
And I think where we took the old kitchen out and put it into the big open space, you have a big utility room, and it's almost like you don't need a massive utility room. Losing whatever it is, 2 meters by 1 meter.
You've got enough room for a washer, a dryer, and a boiler.
Yeah, for a toilet, it's a no-brainer really. So that was a good decision, and I think that was a good modification of the prior blueprint.
It was just like slightly bigger, isn't it? Everyone was like the garden was slightly bigger, the bathroom was bigger, and we had that opening, didn't it? So they actually previously knocked down the lounge and the dining, what was the dining room, they knocked it down and had like that archway, didn't we? And we kind of squared that off, didn't we? Made it nice, and we put like that nice sliding
barn door,
and it looked really good, didn't it?
Yeah, it was a nice effect, sort of gave it that rustic industrial look.
And we've had a tenant in there ever since. That's been like four years, isn't it?
Yeah.
Which has been, she's looking after it.
Ideal tenant, really.
Yeah, keep in touch with
Pays
her
on time. We got a decent relationship.
Yeah, and again, that's probably similar now in terms of all money out. With that, in terms of when you look at the rental figures. So I'll read because I wrote them down because off the top of the head it's quite tricky sometimes. So the purchase price on that was 102,500.
Oh, I thought it was that.
Deposit on that is obviously 25%, so 25 grand, 25,625 to be precise. Fees, so that includes the auction fee and all of that stuff, and solicitor fees, 12,625. Refurb cost on that was 21,750. So our total money in on that approximately was about 60,000. The GDV on that, so the value valued at 145k, and we were a bit unlucky with that, with the GDV.
Very unlucky,
because someone just sold a house that probably wasn't as a higher standard, but it was the same size, and it was the only one that had sold in the last however long. So the surveyor went on that as a comparable, and that's the only one. Not that you can ever do this, but the only one where we've not actually met the surveyor at the property when we've done the deal.
Yeah. And tried to butter them up a little bit, whether we achieve that or not.
That one in Brooklyn.
Yeah. But I think we were unlucky because I think before that, the comparable properties were about £20,000 more.
Yeah.
And I think it was only a couple of weeks before I remember seeing it and I was like, someone sold a property for, I think it was under 145. I think it was 139 or something. And it was a bit more tired, but still I was like, with that bracket, I think that's as well with the smaller value properties. You don't have a massive ceiling to play with.
Yeah,
you've even 40,000 on top of 100. You've added 40%, which is still massive. With Orchard,
really, I reckon. Sorry to interrupt. I reckon in a couple of years when that comes up to remortgage time, I reckon there's probably another 20 on there on top of that. Yeah, probably like the 165. I reckon 170. Yeah, be interesting to see. In a couple of years what it's at. But go back into those numbers. So GDV was 145. So the money out on that was 44,500. And then our monthly turnover when we did the deal originally was £830. But that's now each year gone up. We're now turning over £900 a month rent on that, which is decent. So profit then was 565. Profit now is probably like 6.
Yeah, around a 6 mark.
Yeah, 625.
Yeah.
So with the old rent numbers, that was 27 months to get all of the money back out again. But it's been more than 27 months. So that is literally a house that has been purchased, refurbed, rented out for free. Obviously there's a time investment in it, but the actual
you get a lot of time initially, and then it was sort of self-sufficient after that.
And
I mean, on the build, just to touch as well how we do our builds, each project we've kind of gotten a bit more experience, and we've veered away from physically doing stuff. When we first done our first project, it was like hands on deck,
do the lot,
stripping out, getting dirty, which is always fun, but I think our goal was always to try and be as remote as possible and manage that. And I think
because the more you're doing yourself, the more you're doing yourself, you can't scale. And obviously at first, our original intention was to build our own portfolio and do our own deals for us. And then as we've got more experience and done more deals and speaking with investors, it's moving to that next stage of scaling up and doing deals for investors as well, which you can't be doing every deal, doing this strip outs, doing this, doing that.
It's allocating your time better as well. It's because there's people that are better at doing that than us. It's almost like if we got to justify me and you being there, that comes at a cost as well.
Yeah, you can't be paying my day rate for stripping out a gaff.
Yeah,
not even in a big-headed way. It's it just doesn't make sense.
And there's just some things, painting, you want to get a decorator.
Because they are actually, that is actually their skill and their trade.
I think it's hard when you are hands-on and you like doing stuff. Sometimes you just got to let go, but then you got to move into I'm just going to manage this person in a particular way and get across what I want delivered.
Exactly.
But that's all a learning curve. I think we've done it pretty well.
Yeah, and it's all part of scaling up.
I think that's where our backgrounds, obviously, that we touched on the last episode, really come into play. Obviously, you're a lot more management. I've been in construction, so putting that together, we've obviously just
the skills blend well, don't they? Which is obviously is ideal for us. So that was Orchard, and then let's talk about Buccleuch as well as another recent deal.
Yeah, before time frame. So how we turned that over pretty quickly, didn't we? We bought 6 months.
The actual build time was less than 6 months.
I think build was 3 months, something like that.
Yeah.
But I think by the time that was we kickstarted the remortgage stage a little bit too late on that one. Not too late, but I mean, what we've learned, if you really want to, pump it out quickly, is just even before the end of that project, you want to start that paperwork. You want to get that surveyor booked in, because everything is a couple weeks, and then before you know it, you've lost 2 months and stuff. But this is stuff we've learned, and as well, now we're doing bigger deals, and you've got a bridge that is critical, because a month you're paying $2,000 interest or 100%. Something like that. So 2 months now you've paid 4, 3,
it's
6.
Not like little interest only mortgage payments. Bridges
but
are different stories.
All in all, it was a 6-month turnaround, wasn't it? So it was invest in the project, do the build, refinance, money out again, and then it was tenanted, and let's go again. So I think that was a job well done, really.
100%. And for our first deal that we did together, that was invaluable from an experience perspective as well. That was the last of the kind of standard buy-to-lets that we've done, isn't it? Because interest rates have changed. Deals don't stack as much as they do in that sort of bracket anymore.
That was in the BRR days where you could just pick up something below market, or
that was like
tired,
you could,
and it was just do the
basically
refurb,
paint it,
pull your
kitchen,
money out.
bathroom, and you could pull your money back out again. That was like a goal. I was saying it to someone else the other day. It was like, you don't realize how much of a golden era that was in property, because it was like you really were surfing such a golden wave.
If we had started 5 years earlier, that could have just been wave could have been ridden, and
that would have been a tsunami. That would have been
a surfing expert,
mate.
But
trying to think of a famous surfer.
I think in a way it put our heads together in terms of we had to think
you need to be more creative, don't you?
Something more creative, and it always opens other doors. Like that's then when we went down service accommodation route, and then when we went down the route of we got to get a HMO, or we've got to split house into multiple units and stuff like that.
Definitely.
So, and I think those are the type of deals we always wanted to be doing anyway. So it
almost forced our hand to start doing it.
That's not going to work anymore.
Yeah.
I mean, you could still do that deal, and you could still pull your money out.
It just
but
means
you left no profit.
Yeah,
you're not making £600 a month anymore.
Yeah.
You might only be making £100.
Yeah.
And it doesn't have that substance.
Exactly. And then also the money, to get to the whole no money in, or all money out even point, instead of it being 27 months on that one, it'd probably be like 60 months or something like that, where the amount of money you're making per month is just so much slower.
And when we've started working with clients and investors, that is almost the first thing that people ask.
Yeah, what's my money out on
How
day
long
one?
is it going to take me to get my investment back?
Yeah, exactly.
You know, so,
and on a buy-to-let, standard buy-to-let, it's better off people either understanding that they're lodging their money into the deal for an extended period of time, or doing it themselves where they don't need to pay our fees to do the deal for them, because it just adds to the more money in, doesn't it, for them? So that was Orchard. Then we can go. You spoke a little bit about house to flat, so we could talk about Buccleuch as another sort of recent deal we've done.
I think Buccleuch was a fun project,
yeah,
and that was the one that we touched on that we bought where I didn't.
Well, you
didn't
even see it.
So you done a viewing day. What was your first thought when you went? Because I think originally we weren't actually looking. We weren't in the market for that sort of deal. We
were looking for HMOs. Yeah, so I think I had like 8 properties viewed that day. All with the lens of a HMO sort of deal. Looked at this one, and this was a bit of a wild card. You know, when an agent says, "Oh, no, it wasn't even the agent. It was online," and then I was like, "Oh,
it didn't really even have."
It didn't
any
say,
photos, did
and
it?
it didn't say anything
said,
about house. It didn't even say anything about 2 flats. It just said the house name,
right?
And it just had the pictures. And then when I spoke to the agent, he was like, "Oh, it's actually 2. It's got permission, or it was 2 flats." So I was like, "Oh, that sounds interesting. I'll have a look at that because that sounds a bit juicy." Looked at the HMOs, none of them were great. And then this one just kind of sparked my attention because it had permission to convert it into 2 flats.
About 20 years
ago. And it was used as what I can only describe as a drug den, or something. There was needles all over the gaff. There was... Mate,
God knows what.
Mate, I don't even know if you want to talk about the sort of stuff that was in there, but it was bad. There was like dead animals and rats. There was
a lot of funky smells.
Yeah, and the neighbours were like, "Oh, you've bought that one."
Yeah,
and we were like, "Yeah," but a lot of them were happy because they were like, "Oh, you've actually like on the end of the deal, we've made it nice," and they're like, "Oh, you've completely transformed
it." It was a complete eyesore. Complete. It was sort of the door was caved in. There was a big gaping hole in it.
Well, interestingly, when we actually the day we completed and to pick the keys. I was going to say pick the keys up. The day we were supposed to pick the keys up, the agent actually didn't have the keys.
Well, I remember because I went in there.
You went to get the keys, didn't you?
I'm here to pick up the keys for the property.
I'm the proud owner of Buccleuch.
They said, we've actually lost your keys. I was like,
I don't think they ever had them.
Well, how am I actually going to get back? Not get back. How am I going to get into the property? So we broke an entry into our own property, didn't we?
Luckily, if the police did come, we'd had the papers to say you've completed on the deal, so it would have been all right.
The builder that we brought there, with the plumber that we all lined up on day one, so everyone was climbing through the window.
So we were like well efficient on day one of completing. We had like trades lined up to come and see the property to quote for the work, and then their entry into the house was going into the window that I'd gone into a small. Luckily, I'm smaller than you because I got into that tiny little window, climbed in, and then opened that. You weren't getting in that, no way. But that one was a good deal. So as I say, it had permission to do the 2 flats,
but it wasn't 2 flat. It was laid out as if it was 2 flats.
But
to give people context, it was just a house that had been 2 flats, but no legal paperwork, no actual official setup in terms of proper front doors and stuff like that. Yeah. It was just a 3-bedroom house that was operating as 2 flats with no actual legal boundaries. But there was permission to
planning
do
permission
so.
was done, exactly.
Yeah.
So that we had Spencer from Sheldon's Construction doing that for us, which was such a game changer for us, because where we were doing a lot of the work and managing a lot of the work for construction wise for Orchard, we had Spencer on the ground there doing the work, exactly, which was brilliant for us. So that was completely ruined, that place. So that was, again, complete refurb, new wiring, new plumbing throughout. And the interesting thing was with this one, it was double of everything. So because it was 2 flats, it was 2 boilers, 2 kitchen suites, 2 bathroom suites, 2 bedrooms,
2 board changes,
complete refurb, changed it completely, and it looks, again, kitchen diners in both. 2 nice bathrooms. The downstairs one's got a bigger bathroom. Upstairs got a shower suite in there. 2 nice bedrooms. One of the biggest lessons we learned from that one was the getting the services set up.
Yeah.
So whoever the previous owner, dodgy person, somehow had both flats running off 1 meter. So you could see when you looked at the meter, it was like burnt, wasn't it?
They bridged the meter of
That's
the
a technical
electrics
term for it.
and the gas. It was completely,
Dodgy.
diverted.
Yeah.
And it was blacklisted with every energy provider going. So
Yeah,
everyone
I
we were
had
ringing,
about
they were like, no, we're not powering that.
We're not
up.
touching that.
We're
Yeah,
not
I had
touching that,
about,
which-
what was it, do you reckon? It was about 4 months, 3 months, probably 3 months worth of back and forth between different energy providers trying to get a meter installed, and then explaining the situation of what's happened, and we've just purchased a property and it should have a meter and it doesn't have blah 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 blah. But just for lessons learned for people who are doing this sort of deal, you want to get those applications in place ASAP. Like as soon as you collect,
gas, just get that sorted, because
straight away.
those, especially if you've got to get anyone from the grid out or something like that, they take time to come out, and then they might come out and there's something that they couldn't do, and then you have to wait again for months. So kickstart that as early as possible.
Literally.
But there was a lot of learning curves for that job. I think even just the setup, because it wasn't, even though it had planning permission to be split, it wasn't officially split. So we had to split the title.
So with the purchase of Preclude, the way we got the finance on it, so we put the purchase price was 140, but we actually got the title split as part of the process of the purchase. So we then got the bridge valuation on 2 flats rather than rather than it being 1 block. We thought we were going to actually get a much higher valuation. I think we uplifted it by like 10 grand, didn't we? I mean, 10 grand.
It was still a little bit, wasn't it?
It just meant that we got more bridging finance on it because it was valued with on the two leases rather than the single block, which was handy. The other thing about that though is one lesson we learned as well with that was when we did that, we then had to set up another company because you can't be the freeholder and the leaseholder
within the same company.
So we then needed to set up a new company to be the leaseholder, and then Jack Estates being the freeholder, and then the mortgages going forward are then in the leaseholders' names because that's the leases. So yeah, lots of lessons, and I feel like that deal, because it was a first of type for us, and there was quite a lot of these challenges that came out. It probably brought us forward experience-wise, like two or three deals in one, if you know what I mean.
Yeah, because there was a lot involved, and I think as well, that's how we then naturally drifted towards service accommodation, wasn't it?
Yeah,
because we always sort of had service accommodation on our radar. We didn't really ever fancy the whole rent-to-rent thing. That wasn't really it wasn't our cup of tea. It wasn't what we had the passion in, and it wasn't what we were set up to do. But we had service accommodation in the back of the mind, and I think when we had the 2 units, it was like,
this is it.
Let's do some homework and see what the occupancy is like in the area, which was very good because you've got a hospital there, and it's a working town and stuff like that. So
it's interesting. It's less seasonal. So whereas like with Devon, like with Millbrook, I know for a fact that one it's going to be really good in the summer, and then in the winter it's going to be quiet. Whereas with Northamptonshire, it's not seasonal. You don't really go on holidays to there. So it's like a lot of workers go there. There's a hospital nearby. There's quite a few head offices. Weetabix head offices there. Like it's got quite a lot of like big companies who've got offices there. So the occupancy on that is like on average like 70 to 80%. Like throughout the year, whereas with Devon you'd have like 100% in the summer, and then probably like 10-20% in the winter. So the summer months pay for the winter months. So numbers on that was 140 purchase, roughly 46k deposit on that. Fees were 15 because interestingly again we had to pay the post
auction fee because it was on auction
and it didn't go in the auction, but you still have to pay the auction fee, which is
under the auction house.
Which so is those
stinger really.
Real stinger.
But we got a good deal because their reserve didn't actually get met. But then we sort of came in and made an offer. We're ready to go. I think in a way it worked in our favour. And that was obviously all factored in
into the numbers we were doing. Because we knew about the 6k fee with this time. So the refurb, so the fees on that were 15k. That includes drawing up the new leases. That includes the reservation fee. 50k refurb. So the total investment on that was around 112k. The GDV on that was 225. So I think one was valued at 115. One was valued at 110. Obviously. So
which is a good uplift, 85k uplift.
Yeah.
Which we were pretty happy with, weren't
Yeah. It was just around the Christmas time, wasn't it? When I
Yeah.
remember I was having like an early Christmas dinner and I got that news and I was like, let's get in there.
And that was as well. We had lessons learned that time. We kickstarted the mortgage
a lot
process sooner, and there was a lot of delays. None to our fault, just because I think naturally when it gets towards the end of the year, everyone starts winding down, and it's sort of
because we kicked that process off after like 3.5-4 months
before we even finished.
Yeah, we were like, we know it's going to take long.
He was like, I think it's a bit too early. We were like, no, just get these forms sent out. Let's.
And then it ended up dragging on the process, didn't it? For ended up being like 9-10. So we actually probably spent 3-4 grand worth of interest additional that we didn't really need to, just because of the paperwork process through no fault of our own, just the process of remortgaging and refinancing. So it's one to factor in. If you think you can turn a deal around in 6 months on a bridge, bake in another 6 months just to make sure, just because of not even construction delays, which can happen obviously, but just paperwork and red tape, because it happens. So money out on that was 66 grand. Our monthly turnover on that is around £3,500, which is tidy. So about a monthly profit of about £1,500 on that. So all money out, 28 months roughly. Again, so that was again something that we needed to be creative with, because as we said about the interest rates and stuff, doing a normal buy to let just wasn't going to work. So similar sort of money out time, but a different deal, and obviously a lot more money into the deal.
I think with the serviced accommodation setup as well, there was some learning curves. I think, one of the biggest ones is someone needs to manage that. And if you don't want to be a property manager, you need to find someone that's capable of doing that.
Yeah, because we had that online firm at
first. We went with an online firm, and it was just basically we were managing it, because by the time the complaints went through their whole complaint procedure, it was like, well, that guest actually already left now.
Yeah.
Why am I only hearing that they temporarily lost water or something,
And then we get bad review. We had bad review. Yeah. And then it's because it was a new refurb as well. There was obviously quite a lot of like initial things that you would find and get fixed, but you're getting like guests to finding them, and then they're but with that online agent that we had, it was like, I think they charged like 10% plus VAT, and that was supposed to be, they manage it all, but it's remote service, and then they'll get stuff fixed, and then they'll let you know when they fix it and what money it costs. But it ended up just being the guests would call them, then they would call us.
It was basically a pointless exercise. The only thing they were doing was providing a nice little calendar for us to see the bookings, and they were taking the payments
and taking 10% of it off.
So I think the biggest takeaway is, if you're doing service accommodation, find a good manager,
100%.
And also find a good cleaning team.
Yeah.
Because really, at the end of the day, the cleaning team is the one that runs
They're the ones
the
who are
show
on the ground,
because they're there all the time. If you're on good terms with them, if you need little things done, like can you take the bins out, or we've got a delivery with whatever. If it's internet, you've got to change a box around.
Yeah.
They're there. So I think those two things are key.
100%.
And we obviously we met a lot of cleaners, and we filtered out the teams that we didn't like, and then we found a really good cleaner, and then we ended up going with D&D Property,
Truth Real Estate,
Truth Real Estate, which manage our service accommodations, and I mean they're fantastic,
aren't they? I mean they've
got a lot more. We sort of gave them 2 little flats, and that is just
it's nothing.
It's nothing to them, but they handle it very well.
I think probably
the
best
service that they provide is completely hands off. For us, we invest in the property, they manage it, we make our money, and we don't hear of any problems. And if we do, this is the problem, but we've sorted it.
Yeah,
here's a little bill or something like that.
I think the best testimonial for Truth is we own a service accommodation block of 2 flats, and we hear from it as much or probably less than we do our standard buy to let, which is also managed with an agent. So you think with buying a service accommodation property, you think there's going to be a lot of admin involved and a lot of stuff that you need to get sorted out. But if you go with a team like Truth, who deal with all of it for you, if something goes wrong, they'll tell you about it, but they'll tell you about it after it's been fixed, and they'll say, oh, by the way, this happened, and this is what it would cost to get fixed.
Or, okay, there has been a slight little issue. Can we get your okay for this?
Yeah, and it's like, sweet.
Yes, go ahead with it.
Because you trust their opinion, you trust their understanding.
Because there is a lot involved, but it's just...
There's a service which they provide, which is something that is you can't put a price on really, because they do such a great job. So we've spoken about the deals that we've done recently. Let's talk about the services that we offer as well.
Yep.
Sort of summarised in 4 main areas: JVs, where we'll collaborate with investors and individuals on different investment opportunities.
Yeah.
We've got our fixed rate returns. So that's investors or people investing with us. We'll give them a percentage back on their money over a set amount of time.
Yeah.
And it's set. There's no, as you said, there's no hidden fees.
No,
There's
completely hands off. That is just, we might be sourcing a certain amount for a type of deal, or we might have an investor, which happens normally, to say, I've got this much money. I don't really want to go down the whole managing project route. I just want to invest this money, receive a return on it. And
we're always going to beat the bank's interest rate, because obviously,
we offer different sort of options. You can either have your money at the end of a plan, but some people, they like to invest, let's say 100 grand and get their interest monthly. So it's almost like you're getting paid almost like a dividend or something.
And then
like
at the end of the deal, you'll then get your original investment back as well. So there's options with all of those services, and depends on the investor really, doesn't it, in terms of what they want out of it. Then we've got our project management service. So that's for people who typically want to get involved in property but don't have the experience or the knowledge to get involved, essentially. So that's where we'll source the deal for you. We'll manage the finance application with you. We'll manage the refurb, and we'll manage the refinance application as well. And then at the end of that deal, it is yours. We'll just charge our project management fee on top of it. But as I said, it's good for people who want to get involved in property but don't have the experience in it.
Gives them a chance to almost shadow a whole deal, even in the negotiation process. You're CC'd in all the emails. You can see back and forth conversations between agents and solicitors and brokers. So when you do go to do that project next time around by yourself, you've got all of that sort of experience of people that have got that experience already. And you can just take that on to the next deal.
If you want that. Some people may not want to get involved as much, and we can just do the project management for them, and then they own the deal at the end of it.
It's a one-off fee. They might say, we want 2 flats, or we want 4 flats, or we want a HMO. Can you find it? This is the sort of deal we want. This is our budget. This is our area. And then we go and do the magic.
Which sorts of then transitions into the portfolio building service that we offer as well, where this is more for clients who have a bigger pot of money, essentially, where we map out between 3, 5, 10 years your pot of money, what we're going to invest with it, and how we're going to get the money back out again, and how much it's going to be worth over the 3, 5, 10 years. Again, mostly aren't going to be getting involved in the deals that much. They're not really that interested in
high net worth individuals that have a specific type of goal and money that they want to work with. And we just help them map it out over a time period.
So they're the services we offer. Obviously, if you've got any questions on any of them, reach out to us on Instagram, our website, all of the socials we're on there.
The future for Jack Estates and where we're moving. I think everything we've spoken about, you kind of see what we're about and where we're moving. We want to grow our own company. We want to work with more people. We want to work with like-minded people. Not only that we can provide value to, but we want to get value from other individuals as well. 100%. Even though we've got quite a lot of experience and we're confident in what we do, there's people that are miles ahead of us with different types of developments that we aspire to do as well. So I think the more people you can collaborate with,
100%,
the better everyone is growing. And that's what it is all about, isn't it? It's more about everyone growing as sort of a unit, rather than just individual goals.
That's what they say. Your network is a cheesy one, but your network is your net worth in it, and it truly is. Yeah, it truly is.
But I mean, short term, obviously, that's long term is build that whole sort of family almost, where everyone can, help each other and invest together. But I think short term goals, we're in the HMO market at the moment, aren't we?
Yeah.
And our roadmap is commercial valuations, isn't it? That is.
We've spoken about buy-to-let, standard buy-to-lets. We've spoken about house-to-flat splits. The next sort of piece of the jigsaw puzzle for us in our kind of immediate roadmap is, as you say, the commercial valuations, which are different to the bricks and mortar valuations. With the bricks and mortar valuations, you get a surveyor to come out, they look at the property, they'll say it's worth X amount based on the comparables. Whereas with the commercial valuations, it's based on the money the property generates, and each area has its own local
yield percentage,
and then the surveyor will then multiply the rental amount it makes by the local yield to give you a commercial valuation, which is for the most part, a lot higher than the bricks and mortar valuation, because you can get, like the places we looked at in Plymouth, the bricks and mortar valuation were like 260 or something like that, but the commercial valuation GDV wise it's like 375 to 400. So
but obviously it's not all just we can gain that valuation. There is a lot more work that goes into it. A lot more upfront costs. Money has to be poured into the property for it to be at that level. So there is things to consider. It's so not just
for a HMO is if you've got all like a 7-bed, all ensuite 7-bed HMO, that would be classed as a commercial property, because the amount of work it would take to rip all of that out again and then make it back into a normal house would be too much for it to be worthwhile. So then you get it valued as a commercial valuation. So our next deal will definitely be a HMO, I think. We're still just working on the exacts and the amounts and whatnot. So I've looked to wrap up now. So I think one thing that I wanted to talk about, which is good bit of news that we had this week, was the differences between, the good news that we got with Buccleuch anyway, between council tax and business rates. So we've obviously been paying council tax for the last couple of years on Buccleuch, or a bit less than that. And I put in an application about, how long ago was it? 6 months ago?
The application was 90 days, wasn't it?
Yeah.
So
we had to wait 90 days.
Longer than 90 days, didn't it?
Yeah, 90 working days, which is obviously more. So we were paying £100 odd a month council tax per flat on Buccleuch. And I put in an application for business rates, which is when the property is solely used for holiday let purposes. It has to be let out for, I can't remember the exact figures, but something like 140 days consecutively, and it can't be used for dual purpose. It has to be a holiday let block, essentially. Like, it can't be used for anything else. And if you then if it's valued under a certain amount, you get business rates, small business rate relief, or if it's valued under something even less, you get complete relief, so you don't have to pay any council tax, because it's not a residential property. So that for me was a massive win, because they've actually said to us as well that they're going to backdate the payment to
when we bought it, and when it was operating as a service accommodation.
So for us, it's
a tidy little rebate, no council tax going forward, which
is a touch.
It's always a plus.
Exactly.
But that's something to keep your eye out for if you are investing in service accommodations or something that is deemed in that category. Get that application sorted, and it helps your cash flow, really, doesn't it? And that's what it's all about, really.
Yeah, definitely.
Lovely. So I think on that note, we can probably wrap up the second podcast.
So find us on socials, Jack Estates on Instagram, Jack Estates on LinkedIn, website, jackestates.co.uk. One last thing as well is we've got our weekly newsletter coming out soon, which will be available on www.jackestates.co.uk/newsletter. If you sign up there, you'll get a weekly wrap up of recent property news, trends, investment opportunities.
Anything that we're doing or we have in the pipeline that we might want to put to other investors or like-minded people, it'll all be in there.
Yeah, exactly. So keep your eyes peeled on that. Thanks for watching. Take care.
Cheers.